Oh, hi everyone, and welcome to today's webinar. Before we start, can I just, hopefully you can hear this, but I will also put it into the chat that you can actually hear me. So I'm just going to put this, can you hear me? All right.
Apparently they can.
Oh, fantastic. Thank you. Right. For some bizarre reason, we have two of us here, obviously, myself and David. As you well know, those of you who are coming along the first time, we do this as a two-hander. But for some reason, the system has logged us in both under David's login. So we've either got to share or one of us has got to register and come in as an attendee. Right, I'm just going to see if I can pass to David, and hopefully you can hear him as well. I'll put it in the chat box as well. Right.
Good morning, everyone, and I hope you can hear me. Right, so Anna can hear me, so I'm assuming you can hear me as well. Great, thank you, David. Appreciate it. Thank you very much. I can't hear Anna for some reason, but obviously I can hear her not on the headset. But that's my problem. I'm me, and she is me, and everyone's me. So it's a bit stupid this morning. I'm going to switch off and go back to Anna. So we will get started.
Oh dear. Well, those of you who know us well will know we nothing sort of phases us with regard to what's happening in the markets, trades, etc. But technology and running the webinar, oh my goodness, that always completely upends us. Anyway, welcome again to this morning's session. Before we start, as always, can I draw your attention to the disclaimer that you can see on the screen? Never more appropriate than the way things are at the moment. As you know, this can be a very risky market, so please don't ever think of using money that you cannot afford to lose. So in case this is your first time with us, we will be looking at the charts through the prism of volume price analysis. We look at fundamental and related markets, and all supported by quantum trading tools. I know we have some of our users in the room, and we also have some of our education students as well, and traders, so it's lovely. And as I said, it was the first time with us. I hope you'll enjoy what we do, and hopefully learn something that maybe you did not know before. Clearly, the first thing is we need to go straight to what is happening from a sentiment perspective, because this is about fear, more fear, panic, etc. And the place to look for that very quickly is over at investing.com, and we really just need to see what the futures are doing, the S&P 500, and I've got the NASDAQ futures here, and we can see they are now up. You know what's been happening in the last sort of couple of weeks, what with coronavirus, and now we've had the the grenade that was thrown into the market at the weekend, which is this dispute between the Saudis and the Russians. There's all sorts of political issues around it. This religion has even come into it. Russia is allied with Iran. Saudis are Sunnis. Iran are Shiites. We have proxy wars, etc. You know, I leave it to you to go and read the media to explain some of the background, the sort of tensions that are the regional tensions, the desire for these countries to to become the dominant force in the various regions. And of course, oil sits at the center of it. I've also read today that another reason for this dispute is this is another attempt by OPEC, the cartel members, to actually take out the US shale producers. If you remember a few years ago, the Saudi Arabians tried it by sort of trying to force them out of business by lowering the price of oil. They didn't do it then. They were still around, and this is, if you like, Russia's attempt to take the US shale producers out, because obviously there is a benchmark, there's a cost of production, and once that cost becomes prohibitive, because you can't get the price for your product, then you're going to be on the verge of bankruptcy. And all the producers are very, very over leveraged, very highly indebted, and we will see how this plays out. And of course it put a bit of a spike in the kind of buying and the stabilization that we did see in the markets last week. So that's the kind of market condition that we are in at the moment. We've had a big crash, a lot of fear, equities sort of having very, very serious sell-offs. And all this is reflected in the forex market in terms of which currencies are being bought, which are being sold. And it's the usual suspects. It'll be the yen and the Swiss franc as well, because they are safe haven, perceived as safe haven currencies. Not so much the dollar, and until recently, the dollar, there was all sorts of weird stuff going on with the dollar and with gold before all this kicked off, but it's kind of, gone back to its more traditional role, as it were. And as forex traders, we have to know this. We have to know what impacts these markets. It's not just what you see from a technical perspective. It's not just the fundamental news of which there is not a lot this morning in terms of tier one fundamental news, but the fundamental news is almost irrelevant at the moment. The PMI numbers, so what? Everything, it's like a big reset is going on in the markets. And it's all to do with fear, sentiment, when things are going to perhaps turn around. Is there going to be a concerted effort by the central banks for yet more stimulus? So we will have to wait and see. Now, in these market conditions, there was a question from, I think, Clifford, who said, well, do we trade them? Do we stay out of them? That's pretty much, that decision has to be yours. I can't tell you stay out or not to stay out. All I will say is this. I used this analogy yesterday, although I use a boat, but I'm going to use a car analogy today. When we learn to drive, we have to learn to drive in all sorts of different weather conditions, whether it's a lovely sunny day or whether it's lashing with rain, and the conditions change. Now, when conditions are extreme and you have to be a little bit more cautious. You have to, you don't drive so fast, maybe. You take all the necessary precautions to keep yourself safe. And it's no different in this particular, as a trader. These conditions don't come along very often. When they do come along, they can be hugely, hugely profitable. But first of all, you have to recognize them. Secondly, you have to adjust. When I say cautious when you're driving a car, the caution here is your position sizes. If you want to participate just to see and take advantage, you must do it with the smallest amount possible. It's down to your risk. You risk very, very little, because that small amount of risk could actually pay back handsomely if you get it right. And that's the only way you can approach these type of conditions, in my opinion. If you don't feel confident enough and you think, no, I'm really going to wait till it all dies down, because things do reverse, things change, then by all means, just step aside and go back in when you feel most comfortable. But from a general perspective, given the background, given what's going on with oil, with sentiment, if you're on the program, you will know the currencies and currency pairs that are likely to move, and maybe that's where you will gravitate to. You know why stuff is happening in the forex market. If you're not on the program and maybe this is the first time you're hearing about it, I do urge you to go and check it out, because it's David and I put it together. It's a complete program. It's the technical, the fundamental, and what we call the related markets. In this, an example here, the Canadian dollar will move depending on what the oil price is doing. So that's what I've got to say. I'm just going to pass over to David. We've been looking at some pairs this morning, the yen pairs in particular. What I've got here, I've got the hourly chart of our currency strength indicator, where you will see all the individual currencies. The market's sort of been disassembled, so you can see the move in the individual currencies. We can see the yen has been falling as market sentiment has improved. It's actually been a bit of a turn. Now, I use the hour and the 15-minute. Last point about this is you have to use multiple time frames. It's even more crucial to use multiple time frames. And the hour and the 15, two time frame, preferably three, but three too many. A really good combination of time frame, the hour. So we can see here this has been falling, but look on the 15 here. We can see this as the S&P and the Nasdaq have come off slightly. There's been some yen buying in the market, and also some quite heavy, strong Swiss franc buying here. I've actually been looking at the Aussie Swiss, because the Aussie as a commodity dollar, along with the New Zealand and the Canadian will fall because of oil. Australia and New Zealand will also fall on general risk sentiment. And when I looked at the hourly chart of the CSI, everything was kind of bunched in the middle here, so which tells me a lot of stuff was moving in congestion. But on the 15-minute, we've got some reversals, but we've also got some crosses, because this indicator, when they cross the lines, what it tells you is it's the opportunity possibly to join a trend that is already underway. Because as traders, what we're looking for maybe a reversal or an opportunity to join a trend, a move that is already underway. And some of the tools we've developed here, particularly on the non-time based charts, they will allow you to do this, but you have to use them in multiple time frames. Right, I'm just going to pass over to David, and we'll go and look at some charts.